Is it a regime change today, Jeff Rosenberg, when you see the revisions, when you see 1.881 non-farm payrolls over 60 days, does it shift the BlackRock view?
You know, it's a really good question, Tom, because I was thinking the exact same thing, that, we've had a lot of kind of negative surprises, focused really on the Delta variant. It's important to remember that this payroll report is really pre the CDC mask wearing change in guidance. It doesn't really incorporate some of those more recent changes. Yet, to the extent that we follow the pattern that we've seen in India and the UK, where the variant surges, but it's not a permanent surge, we could be seeing kind of the peaking of the negative news that has been really about the second derivative and the slowdown, and that's manifested itself in a pretty protracted rally in interest rates, since interest rates peaked at the beginning of March. I think the next focus here, and you were just talking about it in terms of average hourly earnings, Mike McKee spot on. It's really hard to digest and decouple the mix shift from the underlying data, but it's a strong print, even with the mix shift that Mike was highlighting. And that's really going to turn the focus on inflation. If we add labor market strength, and let's be clear, this is a very strong report across all metrics. There's very little that you can point to here that's disappointing. And if we add to that, some signs of a broadening out from that inflation that we're seeing in the wages here, this could be that regime shift in terms of the direction that we've had on interest rates that you were asking about.